What is up, YouTube? My name is JAZtrades, and today I am coming at you with another YouTube video. This will be more TA based. I'm excited to teach you guys more about TA and pretty much how I trade, and in some cases how I would invest. Okay. But before we get into that, I would like to talk about my current trade. I got into this trade because of the bear flag. Basically what a bear flag is where it comes down, then it comes up a little bit, and then it rolls over, comes back down, breaks the structure, and continues to roll down and break through and continue down lower. Okay? So yeah, that's why I'm in that trade. I got in at 57.59. Yep, 0.25. And it did go down a lot lower. I was actually up $75 earlier, but that's okay. There was this really annoying thing happening with the MES market. I had to switch to the S&P 500 because, yeah, I'll explain it here actually. S&P 500 right here, and then the MES market, the one that we trade, which also represents the S&P 500 index, right? You got me. Hold on one sec. Does it work now? Nah, bro. You see that shit? I don't. Anyone know how to fix this? Please let me know. I'm a little OCD about it. It bothers the heck out of me. So I'm going to the S&P. S&P 500 to, yeah. So fuck that. Anyway, I have to be like kind of quiet today because my girlfriend is asleep and I am trading extremely late. So, yeah, don't sue me. Anyway, in my opinion, TA is extremely useful, especially when you're able to do the longer term time frames. And that's what we're going to get into right now. For those of you who don't know how to see when this price action was, okay, first of all, each of these candles, which if you zoom in, I'll tell you, like, I'll show you just a lot of candles, right? Each candle represents one 24-hour period. Yes, I do analyze the 24-hour period time frames. And yeah, and then if you look down here, these are the years. Okay, you can see the years here: 2006, 2007, just that small time frame. Right? And then from 2007, 2008 to that eventual crash, 2008 collapse, right? And then since then, we've had like a steady climb upwards due to inflation and deficit spending. But every once in a while, you'll get like a bottoming out, and that is what this line is important for, right? We're going to analyze one touch, two touches. Let's make that a little bit more accurate. Give me 1 second here, boys and girls. If there are any girls watching, I swear I'm not sexist. That probably came out sexist. If you are a girl, thank you for watching. I appreciate it. Okay. 1, 2, 3 touches. This wasn't COVID. Okay, this was back in 2019. Didn't hit it, but as you can see during COVID, it did hit it. Actually, even went below it. Everyone was, thinking that it was the end of the world, but no, we printed more than we ever had before, and that has exploded us into this crazy run. And this was an entire year of chaos too, but it didn't get down quite that bad. And we've just been going straight up ever since. There was a little bit of a scare. If we were to go into short term, I'm going to talk about these blue lines here in a second and why they are important and why I use them in my everyday life. Like I said, I haven't used this chart in a long time, so I have to update it. But yeah, I'll explain those in a second. Anyway, there will be a day, okay, like probably sometime in 2026 is what I'm assuming. Because I like to think about the crypto bull runs and how they happen every 4 years. Um, and it's like this 4 year cycle, and then that after the fourth year, there's a huge bull run for an entire year, and then everything crashes, including cryptos. Okay. And we've just been in this like 4 year, 5 year cycle since 2020. Okay. And we have not gotten back down to this line, but once we do, I believe that there will be massive panic and there will be a lot of shit that happens. Okay. Um, but yeah. So anyway, I always keep my eye on this red line, just in case. And that's pretty much my analysis for the daily chart. It's probably easier to see on the weekly chart. It's probably a little bit more accurate too, right? A little bit easier to see here. 1, 2, 3, almost 4. COVID crash, right? Then just a explosion upwards. So we'll see what happens if and when things do get that bad again. And if they ever do, I'm going to be opening up, options trades and stuff, on my YouTube channel. And yeah, like we'll see how it goes. But I would be pretty confident getting into a long as soon as this line is touched. I thought it was going to happen, um, you know, later on, but um, we can also like identify the years here too if you guys want. First crash was in 2008, right? Um, 2 years later, another crash. 2011 hits the line. Um, 3 years later, or actually 4 years later, pretty much. 2016, that was the other crash. 2017, 2018 was another crash, but it didn't hit. 4 years later, 2020, boom. 4 years later, and we're up here. 4 to 5 years later, we're still up here. So, um, is that telling? Hey, who knows, right? Who the heck knows? But I'm keeping my eye on this just in case. Okay. Anyway, let's go into the shorter term time frames and why I have these blue lines drawn. As you can see here, during this bear market, it lasted a total of 1 year. Back when I was trading the S&P 500 um, with real money, not prop firms, but with real money, I actually got in to shorts every single time it hit this line. Um, with I had a lot of money and I did really well on all of the shorts doing swing trades. I did not open up longs that year because we were in a bear market, but um, I do remember the time that we broke out of it, and I told everyone, hey, now's the time to worry about a bull market because that's exactly what's going to end up happening, a bull market. Nobody believed me. Everyone thought I was crazy, but hey, charts do not lie, okay? As soon as it broke this, and this is, the reason why the charts don't lie here is because of the long-term time frames. I cannot say this enough. The long-term time frames are the most accurate. Hands down, nobody can convince me otherwise. That's just how it is, okay? That is just how it is. Excuse me. Again, still a little sick, so. But yeah, I'm explaining to you guys how I think, how I operate when it comes to trading, and I always like to look at the long-term time frames just in case any of the lines do end up touching during any of the price actions in any of the days. Okay, but as you can see, as soon as we broke out of this bear market, which bear markets always last pretty much only a year, then they turn that money spigot, right, and they print money into oblivion, and things go higher, and so when we broke out of this, we retested back into it for a little bit, but then we just had this slow and steady stream. I think the reason why I have this drawn out here is because I wanted to ignore this due to the fact that this was a massive head and shoulders pattern. And there was a gap opening as well that never filled. So Yeah, gotta worry about that one because when it does fill, it's probably gonna head down toward that deadly line. But that's like people call this the God line, the ones that the OGs that have been in it for a while. Um, they have that drawn out too. But anyway, the reason why I have that drawn out is because of this here tap 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 tap. Right, another tap here, went below it for a little bit, but came back up into it, and et cetera, et cetera. Okay, I'm gonna make this a little bit more updated. Okay, it's kind of crazy how accurate these things are. There will be times where the line gets broken, but for the most part, it's resistance, right? And in this case, whenever it does break and it retests that line, it comes back up, breaks, goes through it, back up, breaks, goes through it, right, etc., etc. And we could just draw that out more too. Let me know down in the comments if you guys would draw this out differently, um, but that's how I did it. You could also, if you want, measure, some of the other bottoms, but it's kind of hard. Yeah, you could go from the head. You can go from the shoulders, I guess, and yeah, let's just stick to the script here. Tap. You just want to, in my opinion, you just want to draw out most of the taps, right? So tap, 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 and then just stay in this range. So yeah, we've been in a weird bull run where they keep on saving us by printing money and or adjusting interest rates or whatever it is. But right now, concerning, we're in like a massive bear flag, right? So we got to keep that in mind. Cool that I'm in a short looking at this, right? So huge crash flag hitting the 50-day moving average right now, or it did, I guess, 4 hours ago at 57.86. And yeah, interesting. Let's see how that trade. Oh, breaking even on that trade now. Well, looking at that 57.86. I don't know. Let me see here. Can I even go to the 4 hourly on this? Where's that? Oh, there it is. Nope, can't even do that. Interesting. That's okay. Anyway, that's the long-term time frames. Okay, so let's go to the hourly. Dun 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 dun. All right. So, and what's cool about this is I already have the line. Ugh, I hate when I speak like that. I already have the lines in place here to refer to. You know, could have gone short here, would have done well. Short here would have done well. Um, you know, let's get into some formation trades now, so I can show you guys. Perfecto, perfecto. This did break the line, kind of scary, right? But you can see here a shoulder, a head, and a shoulder, and a move back up into that range, kind of like bouncing in between there for a while, right? And then getting above it, and then finally testing the line, right? And what's cool is that every single time it tests the line for the first time, there's like massive resistance. And so I always like to play these lines, long-term time frames. Obviously, you have to wait a long time, about 4 months, for that trade. But imagine you're swing trading, right? And you wait for a touch. 4 months later, it hits at 52.64, and you're in a trade for about a month, and it goes all the way down to 49.54, right? Imagine you had like 100K to your name, and you risked 20K, and you opened up a 10 micro short, and you had to wait a month, but you would have made $20,000 on that trade, right? And all you had to do was wait 4 months. So if you guys couldn't tell, I love swing trading. But again, this is like a day trading channel. I'm just showing you guys exactly how I trade here. Another great formation pattern, not just the head and shoulders, right? Like this one, shoulder, head, shoulder, shoulder, head, shoulder, right? Continue going up. You can see them everywhere. But other than that, if we were to actually zoom in more, right, we could start seeing some more formations that would make sense in my mind. So let's get into that. Dun, 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 dun. Oh, this one's a good one. And I'll draw it out for you guys so you can see better. So we broke out of this line, which is cool. But you can see here an M pattern's forming, right? Let's make this red for M pattern. It's a little confusing, huh? Yellow for caution. Caution red, going down. And then we'll do green for any bullish. But right now we'll just look for my bad guys. We'll just look for any bearish. Oh, wait. I know what I said, but goddamn. What a beautiful W pattern there. Huh, boys? Girls? Dang. Look at that thing. Boom. If you guys couldn't tell, I do love M's and W's. W's in the chat for it's going up, bro. It's going up. W means going up. Many names for it. I call it W, but a lot of people will call it double bottom. And then I call this M pattern, right? But a lot of people call it double top, which is bearish. Double bottom is a reversal bullish. Okay. Here's another M down. And you can find bigger M's too. The thing about the S&P 500 though is that trends are a little bit more, especially when it comes to long-term stuff. So if you're going to swing trade, I would recommend trend trading when it comes to S&P. And the perfect way to do it is to just simply chart, the long-term time frames. It's probably the easiest thing ever because, in my opinion, actually, I'm not going to say that. Nope, not going to say that. But yeah, just continue to look here for any. There's a shoulder, head, shoulder, small one, but bullish all the way through. W. Anything else? There's a lot, You zoom in, you can find anything. There's a W right here. Perfect, right? Good move there. Oh, wow. Look at that W. That thing's sexy, huh? Here's another. Boom. Man, that trade would have lasted a long time, too. Let's see here. 23rd to the. It even went higher if you had waited, but. Oh, I'm sorry. Not the 23rd. Monday, the 10th to. That's what? March? April 4th. So what? A month long, but the move is from 38.14 to 41.32. Dang. Just off one W pattern, he would have killed it. It kind of hurts me to do the prop firm challenge, but just seeing this stuff. But it is what it is. Oh, here's a nice bounce off of the long term. This is the bear market. Remember from earlier when we were looking at it? This is a nice little W pattern here, with wick hitting that line pretty aggressively before coming back up, and then eventually hitting the top here before coming back down. It's so it's so obvious. I couldn't be clearer. This is a like one big massive W, holding support. Here's a W here, smaller W's within W's, head and shoulders within head and shoulders. There's a head and shoulder here, shoulder, head, shoulder. That's also another reversal pattern. But this is called an inverse head and shoulders, which is bullish. Actual head and shoulders. Let's see if I can find a head and shoulder for real. Those are bearish. Let us see. Let us see. Let us see. Let us see. Come on now. Where are you? Only thing about head and shoulders is that they're kind of rare, low key. Come on. Damn. That is an aggressive. Oh, that's probably the COVID thing, huh? Yeah. Looks like COVID. Yeah. Okay. I won't mention that. Dude, I gotta zoom in, I guess. Let's see here. Tomorrow. No. Sorry for the delay, guys. I mean, nah, it's bad too. Bad example. I mean, this whole time we were in a bull market, so it's hard to kind of see any. I mean, this one's pretty big. This is a shoulder, head, shoulder, right? So, shoulder, head, shoulder, and it totally tanks, to like an extreme low. Okay, it's a good example. Those are formations. All right, now let's get into some of the indicators I like to use. Let's get it. Let's get it. Yes, I love MACD. I love RSI. And then the stochastic RSI is more of like a short-term thing. Back when I was using that, I never chart on here, so forgive me. Forgive me. Let's do some real-world examples right now. Does that mean my trade's going good or bad? It means it's going bad. Darn it. Darn it, dang it. It's bouncing off the 50-day moving average right now, so going back to the trade. Still up $11, $13, but it's okay. Okay, yeah, right now I would say we're in a pretty bad bear flag spot. But it could definitely go higher because it's bouncing off the 50-day moving average. Okay, and there's stochastic RSI is really good for position sizing. So, if it's really low, then that means there's going to be people that are buying based off that indicator. Okay. But let me take you guys to what was happening earlier that caused this huge crash, right? Let's well, no, my bad. Let's trash that for now. And let's trash this one for now as well. Okay, ladies and gentlebots. Hold on. What am I not seeing? I was looking at this here, and it's been bearish this whole time. Bearish divergence. Okay, going up a little. This was what, the 24th? Okay. Oh, I'm looking too. I'm a dumbass. I'm used to the long-term time frame right now. I'm not paying attention too much. Sorry, guys. Where's the 24th? Dang, this is like, sure? Okay. Oh my God. Wait, I'm so confused right now. What? Crash. I feel like, is it completely different? What, it's a 57.12 and this is what? 57.56? What is happening? Oh. Oh God, I'm like this. I'm so dumb, guys. I'm so sorry. Literally, I'm trading prop firms and I'm thinking about swing trades. My God. So you see these three hills here before it goes down a lot. RSI is pretty consistently going down, and it's showing negativity. And there's this huge gap here, right? So it's getting kind of confusing, but yeah, I guess well, there's no, I don't really actually see a bearish divergence on the TradingView chart. Maybe because the settings are wrong. That's not it. No, everything looks good there. But well, I guess this one didn't really look like it's lower than this one, but that's fine. Because the price ended up getting higher up here, and my prediction it's a little bit more clear here in my mind, but it's totally fine. Anyway, let's look for some more bearish divergence examples and bullish divergences too, so you guys can see how that works. Okay, let's check it out. Here's one. Here's another. Yep, that is a bullish divergence case. So there's a here, here, lower, but higher, right? You compare the two, okay? You get into a long, like, let's say right here, because of the bullish divergence, you would have done really well in this trade. And you wouldn't have broken even for a long time, okay? Could have waited for the, my line to hit before getting out of this trade, obviously. But because we only have 23 hours in a day, when we trade prop firms, this is a pretty cool trade in and of itself. I would have sold way up here. You know, I would have gone in here at 59.82. Probably would have gone out here at 6,053. It's like 70 points. A 1 micro trade on that is, I'm thinking, what, 10, for every 10 points is $50. So 5, 10, 15, 20, 25, 30, 35. That's $350 in one day that I would have made looking at this bullish divergence on the TradingView chart. Okay. See if we can find any other examples. Oh, shit. Boys, girls, check this out. Inverse head and shoulders, maybe? Not bad. Not freaking bad. Okay. Um, that you guys would have killed that. Especially if you got in on the shoulder. Look how beautiful that head and shoulders is. Crazy. Crazy. All right, let's see any other. Ooh, this is probably. I don't know. Nah, there's nothing there. Yeah, I would say lower volume. Sure, why not? Okay, keep moving. Need to show you guys more examples. Teaching you. Teaching you. Ooh, any bearish divergences here? Yo. On this W pattern. Look at this. Look how deep that RSI pocket is. Right? And it goes lower here. It goes even lower. But the RSI is fucking way higher. And another thing that you guys can get used to, okay, is that you can consider this like head, like shoulder volume, head, and then other shoulder volume right here before pumping up. So not only was it a W, but it was um, it was also a what do you call it? Um, bullish divergence trade. Okay, lower, right? Even though it's higher, and this is higher, even though this is lower, which is ultimately bullish, and it's also inverse head and shoulders. So that's pretty freaking cool. Okay, let's see here. Anything? Well, that's a nice W for sure. Okay, any bullish divergences? Another cool thing you guys can do is just you could use formations as well as bullish and bearish divergences to catch some solid trades. Um, I'm just going into bullish bearish divergences for now, as well as formation trades, because that's what I've been doing to do what I've been doing currently with Tradeify. I don't know what I'm saying, guys. That wasn't English at all whatsoever. Um, but I will show many more TA strategies here. Just give me a like, give me a follow, subscribe, hit that bell. You know what to do. But yeah, let's keep on getting into it. I would say that this is a solid inverse head and shoulders RSI pattern. You know, I mean, you guys can look at inverse head and shoulders as well as W patterns within the RSI patterns as well, um, because RSI doesn't always reflect price action. Okay, it's really cool to see these things um, in action play out, especially head and shoulders like this. This is a different strategy that I'm teaching you guys. You could actually use the formations within the RSI as well to find things. Even though this isn't a inverse head and shoulders, it's a W pattern. You could see an inverse head and shoulders here, which is pretty cool. Again, I don't know what the fuck this is, but you have a really bad like fall here, and that puts the RSI at a low price. But if you were to do an inverse head and shoulders right here and here and here, right, you can kind of decipher like during this crash that maybe it won't go lower than this if the RSI goes back up, right? And in this case, it did. It did go higher here, which would be the other point, right? And then it reversed back up. So I would have gone into the trade right here, right? Wait for things to be confirmed before you get in on them, and yeah, ride that wave up. Trying to think of real case scenarios here. Here we are bottoming out, but I don't see anything that's like worth getting into, because you're testing this area like 3 different times already, right? And then a 4th time as well. So I don't really see anything worth getting into there. Oh shit! Look at that M pattern on this RSI, huh? Pretty significant. You can see as the price goes up, especially in this region, right? Even though price was high here, right? But the price goes higher, but the volume in the RSI is going lower, and all that is considered bearish divergence. So you could just basically draw this and draw that, right? And you know it's clear, um, clear as day. Bearish. What is that? Bearish divergence. Okay. Yeah, I think you guys get the point. Feel free to watch my YouTube video here going over exactly the lesson of today. But yeah, I'm currently down $27. Not good. Might lose this trade, but that's okay because I have $750 trade with. If you guys don't recall, I did have a little more than $500 to trade with, but I'm slowly recovering because of the SoCal vibe. Slow and steady wins the race, right, ladies and gentlemen? Awesome. Got it. Get it. Got it. Good. I am very tired, so this is a strange video. Anyway, anything else I need to add? If you guys want a discount on Belanox or Apex, links down below. Feel free to click on those if you dare to try the challenge that I'm on, which is an exciting journey. Again, if you are excited, just as excited as I am, go ahead and hit that subscribe button. Give me a like. Comment down below if you have any questions. And you guys have a blessed day. And I hope you guys kill it in the markets. Okay? Peace out.